Greetings, friends. Let's start with a very honest, slightly uncomfortable, but incredibly real question. You have $100, $200, maybe $500, and you didn't come to crypto to make a boring 10% annual return. The bank will give you 10%. You came here for that crypto miracle. You came for the massive multipliers, the 100x gains. You want to put in $200 and pull out 10,000, buy a car, pay off a loan, or just prove to everyone that you were right all along. And so, you open CoinMarketCap, scroll through the list of coins, and your eyes catch a project called Hedera, ticker HBAR. You start reading about it, and your jaw literally drops. The governing council of this project includes Google, IBM, Boeing, LG, and major global banks. Transactions fly at the speed of light, and fees cost fractions of a cent. The project works with governments and isn't afraid of SEC lawsuits. And despite all of this, the coin costs mere pennies. Immediately, it clicks in your head. This is it. If Google is in, this coin is definitely going to the moon. I'll buy some with my $200, wait for HBAR to hit $100, and I'll be rich. Well, it's time to take off the rose-tinted glasses. Today we are going to talk about whether you can actually make life-changing gains on HBAR if you have a small deposit. We will break down the brutal math that crypto influencers selling VIP channels won't tell you. We will look under the hood of the Hedera Hashgraph technology. But most importantly, I will give you 3 specific strategies on how someone with a capital of $100 or $500 can squeeze the absolute maximum out of this ecosystem, without waiting for HBAR itself to grow 100 times over. Before we start counting our future money, let's take 1 minute to understand what we are actually dealing with. If you think Hedera is just another blockchain like Ethereum or Solana, you are mistaken. It's not a blockchain at all. At the core of Hedera is a technology called Hashgraph, invented by the brilliant mathematician Lyman Baird. In a standard blockchain, transactions are lined up in a single file into a chain of blocks. Because of this, bottlenecks form, fees skyrocket, and the network slows down. Hashgraph works like office gossip. One computer passes information to 2 others, those pass it to 4, those to 8. This technology is literally called gossip about gossip. As a result, information spreads across the network exponentially, instantly, and with perfect mathematical fairness. This is exactly why Hedera can process tens of thousands of transactions per second. It's why the fee is always pegged to the US dollar and costs a laughable fraction of a cent. And most importantly, the network is incredibly eco-friendly. Sounds like the Holy Grail, right? And the corporations realize this. Hedera doesn't belong to a bunch of anonymous developers. It is run by a governing council. Imagine a round table with representatives from 39 of the world's largest corporations, universities, and banks. They make the decisions, and they run the network nodes. You would think that with such a foundation, the coin should cost thousands of dollars and outpace Bitcoin. But why then do we see a long, agonizing consolidation on the chart, with many retail investors jokingly calling HBAR a stablecoin? Let's move on to the brutal math of crypto multipliers. What is the biggest mistake a person with a small deposit makes? They look at the price of the coin, not its market cap. Let's say HBAR costs 10 cents. A beginner thinks, Bitcoin costs tens of thousands of dollars. Ethereum costs thousands. That means HBAR at 10 cents is super cheap. If it grows to just $100, I'll make 1,000x on my money. Now let's grab a calculator. Currently, the vast majority of the maximum 50 billion HBAR coins are already in circulation. If HBAR hits $1, its market capitalization will be around $50 billion. Is this realistic? Yes, absolutely. That's top 10 crypto market territory during a bull run. If HBAR hits $5, its market cap will be $250 billion. That's the size of Ethereum in a calm market. It's tough, but in theory, maybe 5 years down the line, it's possible. But pay attention. For HBAR to cost $100, its market capitalization would have to be $5 trillion. That is more than Apple or Microsoft. That is more than the entire cryptocurrency industry combined at its all-time highs. So, my friends, pulling a 100x on the HBAR token itself from current levels is a mathematically improbable task within 1 or even 2 cycles. Big capital, corporations, and funds do not pump coins 100 times over in a month. They invest for decades. Corporations actually don't want an insane volatile pump of the coin. They need a stable network for their business processes. If your deposit is $100 and you put it into HBAR, in the best baseline scenario at the peak of a bull market, you will make a 5x, maybe a 10x. Your $100 will turn into $500 or $1,000. That is an excellent return for Wall Street. But for a crypto bro with $100 in his pocket, it's not life-changing. You aren't going to buy an apartment. You won't even buy a used car. Does this mean that if you have a small deposit, there's nothing for you to do in the Hedera ecosystem? Absolutely not. You just need to play by different rules. Let's move on to the strategies. If you want massive gains, you need to be where the trendiest narratives are spinning, but where the mainstream crowd hasn't arrived yet. And Hedera's biggest trump card for the coming years is RWA, real-world assets tokenization. What is it? Imagine that company stocks, real estate, gold, fine art, and even carbon credits are all converted into digital tokens on a distributed ledger. The CEO of BlackRock, Larry Fink, has openly stated that tokenization is the future of global finance. Estimates for this market by 2030 exceed $16 trillion. And guess which network institutions are choosing for this? They don't want meme networks that crash once a week. They need legal clarity, transparency, and speed. They need Hedera. We've already seen the massive asset manager ABRDN tokenize its funds on Hedera. We've seen integrations and tests with Shinhan Bank and Standard Bank. We've seen industry giants spinning up network nodes. How do you make money on this with a small deposit? You don't just buy HBAR. You look for projects built on the Hedera network that are building RWA and DeFi infrastructure. The market cap of HBAR itself is in the billions, but the market cap of projects building on top of Hedera might be only $2, $5, or $10 million. This is where your massive multipliers are hiding. If a solid RWA project on Hashgraph grows from a 5 million market cap to 500 million, that's a 100x. Your $100 turns into 10,000. Look for oracles, liquidity protocols, and token issuance platforms within Hedera. Study the grants given out by the HBAR Foundation. They are literally funding startups with millions of dollars. Track who they are giving money to and get into these projects early. Yes, it's a risk, but with a $100 deposit, there are no crazy gains without risk. The second strategy for small portfolio holders is to become an active user of the ecosystem. Historically, retail traders avoided Hedera. Everyone was sitting on Solana, Ethereum, or Binance Smart Chain. Hedera seemed too corporate, too boring. There were no meme coins, no crazy yield farms. But the situation has changed dramatically. Hedera has grown its own thriving DeFi sector. The first thing you need to do is set up a native wallet, like Hashpack or Kabila Wallet. Transfer your HBAR there and head over to decentralized exchanges, such as SaucerSwap. SaucerSwap is the heart of the Hedera ecosystem. That is where tokens of smaller projects are traded. Projects that aren't yet on Binance, Bybit, or Coinbase. When a coin hits a major exchange, the biggest gains have usually already been made. Smart money and risk takers buy assets on DEX platforms. What can you do there? Number 1. Yield farming. You can put your coins into a liquidity pool. Because you provide liquidity to the exchange, it pays you rewards in its native tokens. The APY there can reach 30%, 50%, or even 100% annually. You reinvest the earned tokens, creating compound interest. Number 2. Hunting for microcaps. The ecosystem has its own launchpads, Web3 gaming projects, NFT collections, and yes, even meme coins. Meme culture has arrived here too. Meme coins are a pure casino, I am warning you right now. But that is exactly where $10 turns into $1,000. If you are willing to risk a small amount, the Hedera ecosystem is currently at a stage where liquidity is increasing, but the number of users is still relatively low. It is the perfect environment for early birds. Number 3. Airdrops. Projects on the Hedera network regularly distribute free tokens for user activity. Voting, testnets, using bridges, staking HBAR on native nodes, all of this can earn you an airdrop that alone could exceed your initial deposit. But what if you don't want to take those risks? What if you don't want to dig through microcaps, meme coins, and learn how decentralized exchanges work? You only have a small amount, and you want to invest it as safely as possible in the crypto space. Then your strategy is fundamental accumulation of HBAR and native staking. Yes, we've already established that a 100x isn't happening here. But let's be realistic. If HBAR does a 5x or a 10x over the next couple of years, that is an outstanding result. No legal business in the real world offers that kind of profitability. How do you increase your profit without extra investments? Stake your HBAR. You can do this right inside the Hashpack wallet in just a couple of clicks. You choose a node, for example, a Google, LG, or Swirlds node, and delegate your coins to them. Your coins are not locked. You can sell or transfer them at any time. In return, the network pays you a percentage. These aren't crazy numbers, usually a few percent a year. But the magic is in compound interest and the growth of the underlying asset. If you stake a coin at 10 cents and it grows to $1, your staking rewards in dollar terms also grow 10 times over. Your main task with a small deposit in this strategy is DCA, dollar cost averaging. Don't try to catch the perfect bottom. Buy $20, $30, or $50 worth of HBAR every week or every month from your paycheck, regardless of whether the market is up or down. Over a span of 2 to 3 years, you will build a great bag at the best average price. And when corporate news and real-world utility push the price to new highs, your small deposit will turn into very solid capital. I promised you the truth without rose-tinted glasses, right? Let's talk about why HBAR might not take off as fast as you want, and what risks are hidden in this coin. The first risk is tokenomics and inflation. Historically, this was the biggest pain point for Hedera investors. Out of the 50 billion maximum supply, only a small fraction was initially on the market. The rest of the tokens were regularly unlocked and dumped onto the market to fund development and hand out grants. What happens when the supply of a coin constantly increases? Exactly, the price is suppressed. Even if demand grows, new coins absorb it. The good news is that today, the vast majority of the coins, over 80 to 85%, have already been unlocked. The inflationary pressure has significantly decreased. The worst for HBAR's tokenomics is behind us. The second risk is corporate slowness. You have to understand the difference between retail crypto and enterprise crypto. In retail crypto, a news piece drops. Elon Musk mentioned the name of a dog that matches the name of a coin. Result, the token flies up 1,000% in an hour. In enterprise crypto, a news piece drops. Boeing is testing an aircraft parts tracking system built on Hedera. Result, the price of HBAR moves 2%. Why is that? Because corporations move slowly. From the moment a technology is tested, a proof of concept, to real-world implementation where millions of transactions start burning HBAR as fees, years can pass. The Hedera Governing Council is not busy pumping the price on Twitter. They are building a legal, regulated infrastructure that will operate for decades. Therefore, investing in HBAR itself requires immense patience. If you are the type of person who checks the chart every 5 minutes and gets sweaty palms from a 10% dip, HBAR will destroy your nerves. This is a coin for marathon runners, not sprinters. Let's summarize and talk about the most important thing: you and your psychology. A small deposit is the most dangerous trap in trading and investing. Why? Because it triggers impatience and greed. A person with a $100,000 deposit can easily put their money into fundamentals like Bitcoin, Ethereum, or HBAR. Wait a couple of years, take their 3x, which is $300,000 in profit, and buy a house. They are calm. A person with $100 knows that a 3x will give them $300. That's not enough. And so they start making fatal mistakes. Number 1. They go to futures and use 100x leverage to grow their account fast. The result is liquidation and losing everything on the slightest price movement in the wrong direction. Number 2. They look for scam tokens promising 10,000% APY. The result is the developers pulling liquidity, a rug pull, and the tokens go to zero. How should you act correctly? Treat your small deposit not as a lottery ticket, but as the cost of your education and your starting working capital. If you choose the first and second strategies, the ecosystem, RWA, new projects on Hedera, you will have to work with your hands and your head. Read the Discord channels of projects, follow the HBAR Foundation on Twitter, analyze the total value locked on SaucerSwap, and participate in testnets. You need to convert your $100 into time spent finding alpha, insider or early information. This is exactly how real fortunes are made from scratch in crypto. So, can you make insane multiples on HBAR with a small deposit? I'll answer straight. On the HBAR token itself, no. You won't become a millionaire with $100. You cannot cheat the math of market capitalization. It is a reliable, highly technological, fundamental asset that will bring good but conservative returns by crypto standards. But inside the Hedera ecosystem? Absolutely yes. Right now, it is one of the most undervalued sectors of the market. While the crowd chases overheated coins on hyped-up blockchains, a real economy is being built on Hashgraph. Assets are being tokenized, and strong, decentralized applications are emerging. Split your approach. Invest a part of your deposit regularly into HBAR itself and stake it, creating a rock-solid foundation. And allocate the rest to exploring the ecosystem, buying tokens of young DEXs, RWA projects, and participating in Hedera network airdrops. Hashgraph is the technology of the future that has already earned the recognition of global giants. And being on board this ship while the mainstream crypto crowd still thinks it's too boring might just be one of the smartest financial decisions you can make today. Friends, thank you so much for watching or listening to this breakdown all the way to the end. Your opinion is incredibly important to me. What do you think about the Hedera project? Do you hold HBAR in your portfolio, or do you prefer other coins? Drop a comment down below. I read and reply to them. If this format, without the fluff, illusions, and crypto fairy tales, was useful to you, make sure to support the video with a like, subscribe to the channel, and hit the notification bell. By doing this, you not only help the channel grow, but you also train the YouTube algorithm to show you more high-quality content. Protect your deposits, don't fall for fake hype, and invest wisely. This was Anna, XRP Insider. I'll see you in the next video.